Traders, welcome back. Welcome to the another episode. So, inshallah, in this video, traders, we're going to identify the market from A to Z. We're going to inshallah show you the ways that you can identify the market at very simple ways. So, in this video, I will going to show you some very key levels of liquidity that you understand the market well. So, the best thing that you consider is time frame. So, time frame is a very important things in this industry to be very know in where you can set your time frame. So this thing is very important for you to understand, so that it is mandatory to set your time frame in a highest time frame for you to very vet and understand the market well. So that here, once you overlook, you see here is a volatility 25 index. So that I decided to take this video in my time for you to see the market clearly. So we started to identify the market in the highest time frame, so that we can start this identify in a highest time frame, in a day one time frame. Once we overlook, you see it's a day one time frame. So what we started consider, we only consider with 1 to 2 to 3 more things. The thing that we are going to consider is BS. So BS is represent so where the market is hiding, or where the market is targeting, or where you identify the market and you want to dig market to take the direction of this level that you identify. So that we are going and calling a BS. So that let us postally identify the market, so we start understanding the market. So the first thing that you a trader to understand is you're supposed to understand the key levels of liquidity and where the market is hiding. So you start this in the highest time frame, so that once you overlook, you see we start to identify the market in the highest time frame within the day one time frame analysis. So that once you understand this strategy, he will gonna pay you a lot more using an aspect, and also you can apply in any market, in any financial market. So that we started adopting the synthetic market indices. So that possibly once you overlook the market is in day on time frame, you see the market in all time history, you see the market is doing downtrending already. So that we start the build the market in a trend line, so that for us to know already the market directions. So that once you look, you see we set the line in a channel, we set the price, we set the market in a trend line channels. So that once this trend line is present, it show you where the direction of the market is doing already. So that this is help you to identify. You know right now market is doing downtrending market structure. So that this downtrending market structure in a trade language, we can call it a ascending market structure. So ascending market structure is represent a downtrending market structure. So once you overlook, you see market is going down. The market structure all here you see is going down. So this down that market is doing, we are going to call it a downtrending market structure. So once you know that, so that you start mark the key levels of liquidity. So liquidity is represent a fuel of the market. Market cannot get anywhere without a liquidity. Market is just this financial market is not industry. It's like a motor. It's like a car. A car without a fuel, it cannot move anywhere. So that is exactly with this market. So that this market without a liquidity, it can't go anywhere. So that you're supposed to know that and understand. So that I hope you understand the liquidity. So that we start mark the key levels. The key levels simply means it represents where the market is take the liquidity and also take the directions. So that this is where you're gonna call key levels. So that once you overlook here, we get the best key levels here. Here, this uptrend levels, here is our best key levels that we also call it a AOS zone. So AOS zone is represent of area of interest or key levels of liquidity, or where the market take the liquidity and take a direction. That way going to key levels. And also a key levels market cannot break it. So I hope you understand it. So that we mark this, we set it in a trend line, so that here this thing we are going to call it a trend line. So that when we apply a trend line based on these channels, so once you overlook, you see we set the price in a channels. So that understand this uptrend that the market is going also is weak of this buy side liquidity that is on this area, so that there is a lot of liquidity that the market goes off and takes. So also here there is another blocks. So blocks is just like a valid retracement or valid backtesting that the market takes, and also every valid backtesting also we are going to call it a block. A block is like a key levels, and also every block is have a lot of liquidity, so that once you overlook, here is a It's a day one time frame. And also, once you overlook here, you see the price. This price that is going up is testing the liquidity of this block. This area is taking a liquidity of these blocks, and also this block is have a order block, and also is have a buyer value gap. So that how you can know that. So that let us identify the order block of these areas. So that once you overlook the order block is the last candles that take the liquidity and also apply a fair value gap, so that we are going to call it a valid block point. So that here this is our this is our bearish order blocks, so that we're going to mark it. So that let us mark this order block as we can see it here is our order blocks. So that I have been marked there. So and also let us mark our fair value gap. So fair value gap, here's our fair value gap. Let us mark it. So and also so that we mark the other block like this, so that once you overlook, let us stretch the other block like this, and also so that once you overlook, you see the price is prefer his own other blocks and also his own fair value gap. So once you overlook here, you see this price that is going off. Also, he's with all this liquidity range point. Buy side liquidity range point is also gets within, and also the price is take this inefficiencies liquidity or fair value gap liquidity. So that's once you overlook so much, you see the price is take this uptrend liquidity and also is sweep this liquidity range point. So that and also here downtrend here the last price of this downtrend, we are going to call it a sell side liquidity, and also this buy trend we are going to call it a buy side liquidity. Here buy side liquidity, and here we are going to call it a sell side liquidity. So that guys, I decided to take this video in my chart, so that I am very happy. I'm very enjoying it once I take the video in my chart, so that for you to clearly and very understand the way or the system or the process that I want to show you to be very understand and very educated at this. So that let us mark our sell side liquidity, so that every liquidity market is always hiding or is always targeting. So that once the price take this sell side liquidity, this order block and this inefficiency liquidity has been swept, so that all this buy side liquidity has been taken. So also market get direction of the sell of the downtrending market, so that the market comes to this level and sweep all this buy side sell side liquidity. So also the market after he take this sell side liquidity, so that once you overlook here, you see the price start ranging like this at the same way that it's doing in there. At the same thing market doing in there, start doing in here. So that after liquidity, after all this buy side liquidity has been taken, market started ranging, and also this ranging is have a lot of liquidity that also we know. So that let us mark this liquidity that is at still this downtrend, or I say in this sell side liquidity. So that always market is considered where liquidity is. So also market is considered where the liquidity is. So once you overlook here, you see the last candle. This candle is going to sweep all the sell side liquidity. So here we are going to call it a all-time low liquidity token. Here is all-time low liquidity. So that here it's a very powerful key levels, and also the market it goes to take direction of the uptrend. So already as I told you what is BS, I said for you to identify your bears, it's just like for you to know where is your direction, where to identify the market and know the direction of this market. So that's what we call a market bear. Your bears. So maybe your bears is sell side or your bear is buy inside. So once this market is taking in these levels and sweep of this side, here it becomes our all-time low liquidity taken. So in the phrase, what we're going to call a all-time low liquidity taken is the point that the market take his all liquidity and also his all-time low or all-time high, the last previous of the candles, the last previous of the price, that it finally take the directions. So we're going to call it a sell side all-time high or all-time low. All-time, that is what they're all-time considering. So here is our as I said, here is our all-time low liquidity taking. Here is our all-time low liquidity taking. So for we to understand our bears, so here we get an all-time low liquidity taking. And also, as I told you here, this range of the market is also identify you here. There is a lot of liquidity, and also this range is represented you, or this uptrended range. We are going to call it a ascending call. Yes, ascending is represented uptrend, so it's going to call you ascending. But there is a lot of liquidity towards the ranging. So every liquidity range must be swift. So that I hope you understand this. Every liquidity range must be getting swift. So that as you seen here, you've seen a lot of liquidity here. There is a lot of liquidity of the sell of the sell side of the buy side, and also price after taking this all-time low liquidity and sweep all these levels liquidity and this levels liquidity. So that here it becomes our key levels of liquidity. So the key levels represent, as I told you, the price that is take a last liquidity and take a direction, and also another price cannot come back and break this level. So this block is because it be our AOS zone. So AOS zone is represent a area of our interest, or at the point that we participate into the market. So we are going to quote it in area of our interest. So once we look over here, you see the last price that market take. Also take a movement of the direction, and also this movement that market take. Once you overlook, you see all this liquidity of this here has been swift, and also in another here. So how can you identify all the liquidity of this point has been swift? So that let us take our trend line and take a direction. So once you overlook here, you seen this all uptrend direction has been taken. So in this key levels here is our another area of interest that we take the sell direction up to these levels, so that here we identify where is our order block of this key levels, and also where is our inefficiency of the on time frame, so that we are going to identify. So what is the order block? Order block is the last candle that take a liquidity and also identify his own direction, or is the last candle that take a liquidity and also take a directions. So that here is our this block, we are going to call it our area of interest, or our key levels that we can identify, or our area that we know the price, this price cannot break it. So that already we know the price of the chart, already we have identified it is our downtrend, so that already we know the behavior of the price. So that let us try and see where the market is hiding and where the market is going to prefer, so that to understand our bias. So that in these levels, let us, sorry guys, so that in these levels, as you can see, where is the last candle that's great a liquidity. Here that once you overlook here, and like this candles is the last candle that take our liquidity. So that let us strike to mark it as like that. So that this candles is the last candles that takes a liquidity of the levels. So and also this can be our pair value graph. This can be our pair value graph of key levels of our key levels, and also here must it get like a imbalance. Here this candle is imbalance. We are going to call it an imbalance, so that price can get a return in these levels. So that also these levels we are going to mark it against, so that we mark the levels against like this. Still we mark the levels against like this, so that we are expecting the market. If the market enter to these levels or these levels, it can get a directions because of these long candles that is affair here. So that every long candle that market prefer, or that market identify, that or that market outfit, we are going to call it in any time frame. We are going to call it imbalance, or also the price it must get peeling that imbalance that is this levels. So that about this we are specifying that market must sweep this liquidity because of this imbalance that is under here. I hope you understand the imbalance. So that these long candles, this double long candles, we are going to cut it the imbalance. And also the market, we know every imbalance must be sweep, must be feeling, so that we know already market direction is uptrending because of these levels. And still we cannot say only this liquidity of the buy side is not in the market. So that market is prepared to feel all this liquidity of these levels, all this liquidity of these levels of the market must be getting feeling, so that in this time frame there we know already market, our bias is here still is buy side, is buy still, so that our bias still is buy, we know, and also our valid fair value at these levels, and also is our area of interest is this order block, is this previous order block is our area of interest that we are interested in. The market cannot break these levels, and also these levels. And also these levels, once you overlook here, once you overlook here is pair value graph of this order block, so that it is our order block that we can identify. And also if the market enter to this level, still can get a sell directions. So still we need the market to break this liquidity range of these levels. As you can see in here, is still a range of liquidity that must be getting sweeping, so that before market take this direction, once you overlook the movement of the market through uptrend, you see the market come to these levels and sweep the liquidity of this area. Here we're going to call it internal liquidity range. And also market, I want you to just to understand this uptrend that the market take, so that let us draw the uptrend and also check a 4-hour time frame to see the clear movement of the uptrend that market is taking. Yes, so that as you can see here, traders, as you can see here, as you can see this chart that I have been drawing, I just want you to know what kind of movement is market going to take. Well, that in a trading language, we call this uptrend as a descending like, yes, it's at descending channel, is represent a uptrend of the market. So that once you overlook the behavior of the movement, you've seen the price come back and sweep this sell side liquidity. We call it internal range liquidity taking, and also sweep this buy side liquidity. We call it external range liquidity taking, and also market comebacks and testing it of this sell side liquidity. We're going to call it internal range taking liquidity movement, and also sweep all this buy side liquidity. Once you overlook the market, you see market is not break all over here. You've seen it's just taking an order block liquidity and inefficiency liquidity and take a direction. And also once the market get moved, you've seen the market is just sweep all the buy side liquidity. That is why you understand it is an uptrending market. So that once you overlook here, you've seen the market comebacks. After the market sweep all this high liquidity, you've seen the market comebacks here, and also takes up all this inefficiency of these levels. So that here is our internal range, and also here is our external range. So in this movement, from here you see market is just prepared to come back and also takes a liquidity of these levels. So also let us identify the order block of these levels. We're going to identify these levels, and also market can come back. Here is becomes our key levels that the market cannot break through this movement of descending channels. So that let us identify the order block of these levels. Let us identify the order blocks of these levels, so that as you can see, here is our order block of these levels. Here is our order block of these levels. And also here there is our inefficiency or imbalance of these levels. So that let us try to mark the imbalance of these levels. As you can see here is our imbalance of these levels. As you can see, sorry. So that as you can see, guys, here is our imbalance of this level. So that here is our area of interest that we are interested. And also here is our last internal range liquidity takings through this movement that I have been through. So that market still it go back and also is testing it of the inefficiency of this level. As you can see, sorry, let us try to identify you. As you can see here, is an inefficiency. So that, and also this, as you can see, is our order block. So that is why these candles go back and testing the liquidity of this imbalance. And also market now, he is targeting to these levels. He is targeting this inefficiency. I hope you understand. I hope you understand these channels that I have been through what I'm going to call it. And also our BS still is buy. Still buy is not enough the market. And also market is going these levels, is targeting these levels to sweep all this sell side, this buy side liquidity, is targeting this level and sweep all this buy side liquidity. So that's our BS here is just only one thing, is our BS through short term, or I say through scalping trading. Our BS here is just only sell, because market is targeting these levels. So I must still, here it becomes our valid key levels that we are waiting the market. We can set our sell limit or buy limit order through 50% of this inefficiency. We can sell it 50%, and also stop loss must be there, and also targeting up to these levels of buy side liquidity. I hope you understand this strategy. So also this strategy is mandatory to check the market in every time frame to identify your predicatives. Once you overlook here, you see I draw the market like you cannot understand. So that this strategy you cannot understand. We call it SMC strategy, smart money concept. So you cannot do these things without you know how exactly I do it, so that you don't skip the video. Build the video from A to Z, so that here we are going to call a 4-hour time frame. So the important of 4-hour time frame is to confirmation of your market predicatives. So that let us go to the 4-hour time frame and checks our predicatives. So once you overlook, here is our key levels, and also here is our previous key levels that we draw, our inefficiency, our day on inefficiency that we have been marked, sell side liquidity that we have been marked, short term buy side liquidity that have been marked. So this descending channels that we have been marked, key levels that we have been marked, market direction that we have been marked, everything that we have been marked, we have been seeing. So, and as we seen here, we see the market is preparing to sell and comes to these levels and take a liquidity and also go off and sell all liquidity and get down. So that you must check the market. You must, if you want to predict the market, so that predict the market from a day on time frame, from a 4-hour time frame, monthly time frame, highest time frame. It is very, very important in this strategy. So that my name is Dr. Muhammad Salis, Dr. for Forex, as you know. So that, thank you so much. Share the video, like and comment. Thank you so much.